Good morning and welcome back to the London Times. It is 5 a.m. Eastern, and let's get started off straight away with the. Let's get started with gold. I think gold has. For those who are joining in tuning in recently, we would like to update that gold is proceeding higher overall within the minor wave 5, which is labeled here in numerics. Minor wave 5, possibly towards the 3150 range. It could also extend towards the 3200 range. And within the fifth minor wave or fifth minor rally, it has already completed possibly minute wave 1, 2, 3, and 4, and now proceeding towards the minute wave 5 completion. Furthermore, within the minute wave 5 completion, we can see the subdivisions as follows. The minute wave 1, 2, and 3 are now looking complete at 3057, 3060 range, falling a bit shy of 3092. In fact, it has dropped only about 15 odd points. Let me just bring up the hourly chart. So we are not really encouraging you to enter on the short side, but it is quite possible that minute wave 3 is now complete at 3057, and prices may slowly but steadily graduate towards first 3025 and then pull back, and it could possibly unfold a three waves or a zigzag or a flat, extending its drop towards the 2990, all right, 2990 levels. That could be the next target for gold, around 2990 in the near term. Now 2990, when we say extreme aggressive traders might want to enter shorts with uh, an immediate stop at 3060, not more than that, but with a target of 2990. But it's better to sell after a break of 3025. Let prices break below 3025 and then pull back and then sell. That would be a safer strategy. Having said that, 2990 remains a good point of support where bulls might come back in control again and continue to push higher towards the 3100 mark. All right, so be a bit watchful and a bit vigilant. For those who are not wanting to take that unwanted risk on the short side, I mean, either now or after a break of 3025, they should wait patiently for prices to trigger or drop around or settle around 2990 and enter or re-enter on the long side, pushing higher, and try and capture that rally between 2990 and possibly 3100. It could also go towards 3150. We don't know exactly, but a hypothetical extension done right now would actually mean that prices would actually go towards 3150. I think let's take a hypothetical target of 2990 and see where the price target is going. That would be that would potentially be, I mean, 3128, sorry, 3128. That could potentially be the final wave or final rally for gold to terminate wave 5 at three different degrees: minute wave 5, minute wave 5, and minor wave 5. So you've got to be very watchful around the 31, 31, 2030s range, where gold is expected to terminate around wave 5 at 3 different degrees. Alright, so the trading strategy for now, extreme aggressive strategy could be wait for a break about 23025 and then a pullback and then sell with the target of 2990. That could be one of an aggressive strategy. Okay, if you don't want to go that aggressive way, please wait for a decline or a drop towards 2990. It's going to be gradual. I don't think it's going to be like a flash towards 2990. If it is, we will review. But in any case, you see that small channel line, the thin channel line. That's an Elliott channel line. If prices kind of uh, find a bottom here, then that would be the next buy level towards 23128. All right. Okay. So that's the story in gold. Let's move on to the Euro USD. All right. As discussed earlier, Euro is now unfolding possibly its last leg within the 5 wave decline. As expected, maybe we are looking at 1, 2, 3, 4, and 5, and this entire pattern would be then defined as a 3, 3, 5 or a WX, maybe Y, uh, a very complex corrective pattern, ideally settling down around somewhere around the 28 or 081020 region. That would complete the sub-minute wave 4 as we have pointed around on the 4-hour time frame. It's a good thing to happen because not to worry, it's good for us that euro is declining towards the 2800 levels. That's going to give us yet another opportunity to go on the long side, please. So please don't get shy in initiating longs between now and 1.0800. That would be my sub-minute wave 4, and then that would which would lead to yet another rally towards 1.11, uh, possibly the sub-minute wave 5, and also the termination of minute wave 3. All right, and then we still have got minute wave 4 and 5 uh, going for completing of minute wave 3. So it's still a long way, but it's what we are seeing right now, or what I'm seeing right now on the chart is a good story where sub-minute wave 4 is just about ready to terminate around 1.080010 range. All right. So that's what it is about euro. Let's move on to the gold. Sorry, dollar index, please. The stop loss in euro for those who are going to buy fresh over here will not change, unfortunately. It would still remain at 1.05. Just want to clarify because that's the safest place and technically correct, where you are placing a stop loss just below the termination of wave 1 and allowing room for the impulse wave. But impulse wave, if it is, then ideally prices should not enter the territory of wave 1. All right, so don't play around please with the stop loss. Even if you get around 1.08, that's 300 points of risk, and it's about at least 300 to 500 points of reward. All right, so at least 500 points, sorry, of rewards. It's not going to stop at 1.11. All right. Now, as we see prices declining in the euro, I think we should be seeing a rally unfolding in the dollar index, uh, possibly going towards 104 or remaining just shy. But tell you what, even if it remains shy of 104, and if you're able to sell closer to 103.80 or 103.90, it would not be a bad idea at all to go and take a short there, and then carry it all the way lower towards 101.50, 101, and towards 100 and below. All right. Please remember this is a sub-minute wave 4, which is a third degree of extension, third of third wave extending, and within the third of third wave extension, it's a sub-minute wave 4. So we still have got room for downside, much lower towards 95 by the time the minute degree gets completed. 1, 2, 3, 4, and 5. All right, as far as the risk is concerned, as we discussed in the euro, it should be slightly above 106.86 because that's the wave 1 termination, and you've got to be just above that wave 1 termination in case of the impulse. If it is an impulse unfolding, which it looks like, an extended impulse where the third of third wave is extending and the overall third wave is also extending. Ideally, prices should stay below 106.90 going forward. All right, so that would be your ideal stop loss, and continue lower, expecting lower targets towards 101, 100, and 197, 95 range. All right, sir. I think pound. I would be very pleased to see if pound is also producing some kind of a meaningful pullback, because that's what we have been waiting for. Yeah, it is doing so, and ideally, if you are still waiting on the sidelines to enter pound on the long side towards a larger degree trend, please. An ideal level to watch out for is 1.28, and if it doesn't drop through or doesn't carry through 1.28, even around the 2900 over there, it would be a good idea to enter. But 1.28 is an optimum level, the 38.2% of the third wave. So 1.28, I was just checking if the third wave is this one or the entire one, but I believe that wave 3 is extended and wave 3 is actually complete, so it is quite possible that much deeper correction occurs towards 2600. But tell you what, 2800 would be a good idea to enter on the long side for us and not wait until prices drop towards the 2600 mark. All right, that would be a good place to enter with a stop around 1.25 and potential target around 1.34 actually on the upside. This could be the last decline in euro and pound and last rally in the dollar index before the next leg of next sell-off or rally resumes actually respectively. All right, so and Bitcoin, we have taken partial profits. We've also taken partial profits in the Dow Jones just before coming online, and it is quite possible for a correct. This is the counter trend. That's what we have been contemplating all this while. So when I'm dealing with counter trends, I don't deal with just take the trade and close your eyes and remain until the next target hits. I try to take small profits and again buy on dips or pullbacks, that's what we've kind of done. It could be an ABC as well, 5, 3, and 5. So that makes it a three-wave rally. And if it is correctly done, then it would reverse very sharply for a next wave before the next three-wave rally resumes. So in terms of Bitcoin, we've got to be a bit vigilant. Why? Because we've already discussed that the drop is an impulse, so it could also be seen as the beginning of a new decline or beginning of a new trend lower. So I'm keeping that in mind both in Bitcoin and Dow Jones. So being on the long side always turns a risky strategy for me, and taking short-term profits is always advisable. That's what we have been doing, and we will wait for the right opportunity again if we can go back on the long side both in Bitcoin and Dow Jones and take it further towards 95 and 43,000, 44,000 respectively. All right. Just a short story for Dow Jones before we come to a pause. Now, see, the Dow Jones is also very close to the 38.2% of the entire decline. So it won't be a bit surprising before the Dow Jones also corrects itself lower before beginning its third wave higher. And if this is unfortunately wave 4 of the entire drop, then we are going to see yet another decline towards 37,000 before the corrective wave actually resumes. So we've got to be a bit careful while taking long positions, and that's what we are trying to be here. All right. So it's advisable. I mean, 600 points in Dow Jones and 1,000. I think around 83 to 86. I mean, it's almost 3,000 points in Bitcoin, not a bad deal in a counter trend. So it's advisable to take partial profits or take complete profits on the longs that we've taken in Dow Jones and Bitcoins. Sit on the sidelines for a while and wait for another correct entry before we initiate longs, or I think we would be more happier to sell on rallies. All right, so these are the stories as we move into the London Times, and we'll be back again in a few hours to touch base or continue the story in the New York session 2. Until that time, once again, thank you for tuning in, and please do take care and God bless. Goodbye.